Hi, my name is Jeremy Martin with Cambridge House International. We're here at the Toronto Resource Investment Conference 2012, and I'm sitting with Mickey Falt, the mercenary geologist. Mickey, thanks for joining me.
Hey, thanks. Good to be here, Jeremy.
Now, Mickey, whenever we come to these financial conferences, people are always very interested in getting a piece of the geologist and really wanting to know what they have to think about a variety of projects. As a geologist speaking to a non-geo, what do you think is a very important thing for these investors to focus on project-wise, maybe beyond management, that is kind of crucial to making their investment decisions?
Well, everybody has a story here, and there's somewhere on the order of 1,700 of these juniors listed on the Toronto Venture Exchange, and everybody's got a story to tell you. But tell you the truth, there's not that many good projects in the world, and we've seen that time and time again. The majors are having trouble, especially in the gold and copper businesses, finding enough ore. So what you really have to do is go and look for the right projects, the right share structure, and the right people. I have a bit of an advantage because I'm one of the few newsletter writers that actually is a geologist. But I can look around any given show and I can eliminate most companies because the projects don't quite meet muster for me, and I have a set of criteria. What I try to do through my educational stuff at these shows and also my writings is to educate people and give them some parameters about how to separate the good projects from bad projects.
Absolutely. No, I see over the course of a lot of your newsletter writings and things like that, you've often trended towards the strategic metals. You seem to do quite a few property visits towards things like that. A year ago, you're big on uranium. There was a bit of a disaster just over a year ago. What's your feelings now, a year later? Are you still that uranium bull that you were a year ago?
Well, I am, and I'm a long-term uranium bull. You could probably label me as a perma bull in uranium. I'm generally not a perma bull on very many commodities, but the supply and demand fundamentals with 14% of the world's electricity coming from nuclear, that's going to increase. We need a constant supply of uranium to satisfy demand. For a number of years now, demand has exceeded supply, something 25 to 30%. I think that's going to continue, and it's very difficult to find very good uranium deposits. There's a few good uranium deposits out there. I would encourage investors to look especially at ISR, in situ recovery uranium, because at the current price, a lot of new mines are not going to be economic. The price has to go up $65, $75, even $80 for a lot of these new uranium mines to be developed. On the other hand, in situ recovery can produce uranium $15 to $20 a pound. And that's basically where they inject a benign solution, basically soda water, down a hole and recover the uranium. So it's really a well field. It's not a mining operation per se, but these are very low cost, and I think they will be the future of the uranium business.
Now, as you're mentioning, some of these deposits aren't quite economic at these lower commodity prices, and they won't be able to justify the development of them unless the prices increase. Are you seeing that kind of across the board with other commodities as well? Is that something you're only thinking about is uranium, or are you thinking that's kind of a common trend across the commodity market?
Well, I think that's really more specific to uranium. You mentioned I have looked at a lot of what are called critical or strategic elements, strategic metals. I prefer to call those specialty metals. That's historically what they've been called. And I look through those, and I can give you, if we include the rare earths as one package elements, there's about 21 of these specialty metals. I only know 3 that I consider that juniors can be successful at. That would be tungsten, antimony, and rare earths. And other than that, there are very good market reasons why a lot of these other things can't be viable projects for juniors. Either they're controlled by cartels or monopolies. There is no standalone deposit. In other words, they are a product of of base or precious metal smelting. So there's a variety of reasons, and I've written about that recently, and only 3 of 21 make my list as something I'm interested in.
Now, even just a few short months ago, maybe 6 months ago, graphite was one of those real big buzz ones. Has that one fallen off, not as important to you anymore, or?
No, graphite is still, I'm still a committed investor of one, what I consider to be the best graphite company. It's something I got involved with. Certainly anybody can go to my website and figure out what that company is. On this trip right now, I'm doing 3 conferences in an order of 10 days. This is, of course, the biggest one and the last one of this set of 3, but in between, I was at a graphite play in northern Quebec on Wednesday or Tuesday, and I'll be at another graphite play the day after this conference ends on Saturday. So I'm still looking at graphite. It did not have the market longevity that I thought it would. Prices came down. We were confounded too by the summer doldrums, but there are still viable graphite deposits out there that, in my opinion, will make mines in the near term and be successful.
Now you're just referencing, the price is not kind of sustaining and those summer doldrums, and we've kind of been in some people have been referring to maybe an 18-month bear market where we've been very downward trending since March 1st. Had a pretty gradual summer here on the Venture Exchange. Are you optimistic, pessimistic moving forward, 6 months, short term, long term?
Well, and I'll preface my remarks by saying that as geologists, because our chances of success are always so slim, we almost by nature have to be eternal optimists. So for me, the glass, I like to look at the glass as always half full. Well, it's always full, but it depends on if it's filled with air or liquid, right? But I am cautiously optimistic. We said back in April that I didn't see any catalysts that were going to move the market pre-Labor Day, but now Labor Day has come and gone. We've seen an uptick in the junior markets, up something on the order of 10% above their lows, and this would be the Venture Index, which is a pretty good proxy. We have quantitative easing, which is up the price of gold. Price copper's up, oil is up, everything is, commodities are doing better, and that's bullish for our industry. Whether this is sustainable, Jeremy, I'm not really sure. I'm cautiously optimistic about that.
Well, you've always, I guess, naturally, you can tell you're a fan of these Canadian junior mining companies, but as you're saying, QE3 officially announced recently as a commodity speculator and investor, there's an upside that. Are you still maybe a little bit concerned about the American population and this isn't, this is another Band-Aid and we're not, as being a citizen, not properly dealing with this?
Absolutely. This has kicked the can down the road, but they've been doing that a long time, and they've kept the economy, world economy, although it's not humming along, it's not that bad, really. And so ultimately, yeah, this whole financial system we've created, it's a mess, and it probably is going to collapse. But I don't know if that's, I know it's not tomorrow. I seriously doubt it's within the end of the year, and even more seriously doubt, to tell you the truth, it's in the next 5 years. They seem to be able to do it. They're kicking the can down the road. And, there's been people in our business that have been alive or been talking about this, let's say, longer than you've been alive, Jeremy, and it hasn't happened. It's every fiat currency in the world is bound to end in disaster. At some point, those disasters will come, but personally, I don't think it's going to happen in my lifetime.
So you're feeling pretty secure about hedging against with the hard assets and taking care of yourself, and so you're sleeping.
Physical gold in your physical possession is anybody that has at least 10%. If you have some wealth, I would encourage everybody out there to have at least 10% of their net assets in physical gold in their physical possession. It's simply your insurance policy, your hedge against financial calamity. If you don't need it in your lifetime, it will make your children rich or your grandchildren rich. There's a golden rule. He who has the gold makes the rules, and I'm a firm advocate of that saying.
So that security's helping you sleep at night then?
Absolutely. I sleep very well at night.
Well, that's the best. Well, thank you very much for joining me, Mickey.
All right. Thanks a lot, Jeremy. It's a pleasure.